please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
On that issue, we have the we have Ittira Davis, the MD and CEO of Ujjivan Financial Services. Mr. Davis, good morning and thank you very much for joining us. How does the margin picture change now? Will you be able to pass on, I mean, how much on an average will FY19 cost of money rise for you, and will you be able to pass it on?
Yeah, good morning. The interest rate hike was sort of anticipated. Now, obviously, the quantum of hike we have to wait and see. But we had prepared ourselves for a 0.5% increase in cost of funds during this financial year. And, the net interest margin, which was slightly above 11%, will average for the year around 10.5%. And I think, that will be something that we can accept. Part of it will be passed on, and I think, the industry has already, the small finance banks and the microfinance institutions have already started looking at passing on some of that interest costs. So I think it's something that we have anticipated and we'll have to live with it.
Okay, I'll ask you a few more questions on your costing and the impact it can have on number of customers. But already, when we had your Q1 numbers, we saw that disbursements had contracted by 7.5%. The number of customers also had fallen by about 0.5% in YOY terms. Is that reversing at all?
No, that has actually reversed, because what had happened in the first quarter is there was a cleanup of the bad loans which we had, and we had to remove the customers who had defaulted. So that process sort of affected the numbers. When you looked at the final numbers, it didn't take the increase, it showed the net amount. So in the last 2 months since the first quarter results, we are seeing good amount of new customers coming on board. And we expect, traditionally for us, the second half of the year has been very good in terms of customer growth and business growth. And we anticipate that that will continue. And I think, it will overall for the full year make an impact as we had indicated before.
So what did you say will be your average cost of finance for FY19?
We will be ending the year at an average cost of about 10.5.
That's significant.
Sorry, the interest cost will be around the interest cost will be around 8.75%.
8.75. That is also significantly higher than some of the brokerage notes that I'm looking at. Maybe they didn't factor in such a swift rise in the yields. Sir, also, I mean, just explain to us, how your, asset liability picture is going to change on the deposit side, because you've been trying to build that franchise also. So what can we expect in FY19 itself in terms of the deposit build?
Yeah, the deposit build has picked up because we have now been able to focus on the branch openings. So that is something that will make an impact and has already started making an impact. So for the full year, our retail deposits will be about 1/3 of the total deposits that we have. Then the institutional deposits will be another 1/3. And the final 1/3 will be made up of the deposits which we have from other banking institutions.
Okay. Well, you had announced that, you're going to move away in terms of sources of funds. Now, I'm reading out of a Macquarie report, which is what my colleague was alluding to. And they are saying that they expect a decline in the cost of funds to 7.8% from FY18 to FY21 over a 3-year period. Is that a fair assessment?
Yeah, it should move in that direction because, we have still about 1,800 crores of legacy borrowing, which is gradually going off the books during the next 9 to 12 months.
Sure.
So that going off the books would reduce the cost of funds.
So you said that for this year, FY19, NIMs should average at around 10.5%. And you said you will have to pass on some of the interest rate hikes, I mean, the increase in your own cost of borrowing. Have you done that after your first quarter results? What is the quantum of the rate hikes that you would have to pass on, and how soon?
We have increased our interest rate by 0.5% effective September 1st on our microfinance loans.
Okay. You were saying that the fall in customers was because of weeding out of defaulters because of NPA. How much do you think you will be able to increase customers, and how much do you think you will be able to reduce your GNPA for the current quarter? Because I think you more or less know how this quarter has been.
Yeah, the GNPA is now heading down. You know, we have it's around 2.6% now, and the new portfolio that we have put on in the last 9 to 12 months, the non-performing assets are below 1%. So we are back to, in terms of the new portfolio build-up, we are back to the old trend in terms of managing the credit quality, and I think that's a very good sign. And in terms of the cost of funds, I think, or the net interest margin, we should be able to manage within the range which we have forecast already.
Okay. And what about the problems possible in Kerala and Karnataka because of the floods? Will that cast a shadow and therefore, you know, postpone your GNP targets, NPA targets?
No. No, we have 12 branches in Kerala, and the portfolio there is 178 crores, which is about 2.3% of our overall portfolio. So in terms of the size of the exposure, it's not large. We have given a repayment holiday in line with what the other banks have done in Kerala. And, you know, we see that the customers should be able to fall in line once the holiday period is over. So we don't expect any serious negative impact on our Kerala portfolio.
Okay. What is your percentage?
As against the Karnataka issues on the...
Sorry, go ahead. I'm sorry.
Yeah, go ahead.
No, you were telling us about Karnataka.
No, on the Karnataka side, the losses, property losses, and the effect of the floods is in an area where we don't have a direct presence, so that will not have any impact on our portfolio.
Okay. No, what I was going to ask you was, what is your exposure to MSME and SME companies? And over there, is the stress of GST over and done with, or can there be some more GNPAs coming from there?
No, I think the GST, if we look back and see how GST has evolved, we find that you know, GST coming in is now helping us because more of the customers are doing the transactions through the banking system, and that gives us a lot of data in terms of data analytics and helps us to evaluate the credit better. So I think you know, in what apprehensions everybody had at the start of the GST has now been mitigated, and the overall trend seems to be better. Most of our MSE customers, or in fact all of them, have GST you know, numbers and listings. So in a way, it is something that is beneficial to the portfolio.
Okay. So finally, you said that the trend of slower disbursements, lesser number of customers, that's reversing. So for FY19, can you leave us with the target, AUM growth, disbursement growth, sir?
Yeah, the microfinance portfolio is expected to grow by about 20% over the previous year. And the AUM overall is expected to be around 30% growth. The difference is being made up with new businesses that we have done and doing quite well, housing and MSME, and also we are doing some institutional lending to other NBFCs. So these new businesses and personal loans as well. All of these are growing from very low amounts. So overall, a 30% AUM growth can be expected.